fundsupermart.com.
Hi Michael, where are your sources of income and how do you identify your sources?
So our income strategy is very diversified, and we look all around the globe for sources of income. So that includes segments of equity markets and all segments of fixed income markets. So we can own anything. At the moment, we have in our strategy we have about a third of the allocation is in high quality, high dividend yielding stocks. So these are very safe. We would call them global franchises. Investors would know the vast majority of names, and the yields there I think are compelling. They're around 3.5%. We think the dividends are going to grow around 7 or 8% a year. So we like that part of the market. I think the fixed income markets have become much more complicated over the last few years as yields have come down. But we do like segments like US bank loans and global high yield bonds. We like mortgages. We like US preferred stocks. So I think you're having to look harder for income opportunities on the fixed income where you think the yield and the risk are still balanced. And a lot of fixed income markets, we think that the yields are too low and they're not sufficiently compensating you for the risk that you're taking.
What factors do you consider when choosing an investment for income?
So I think there's a lot to consider right now in today's market when you're looking for income because at a very high level, most bonds aren't nearly as attractive in terms of yield as they were a few years ago. Obviously, interest rates have come down a lot over the last few years, and I think that poses that's a big issue for all investors. And so, in general, we've taken less risk, and our allocation to bonds has come down quite a bit over the last few years, and it's gone up in stocks. That said, I still think there's some really interesting opportunities for fixed income as long as your expectations for total return are a little more measured, because I do think that sources like high yield bonds, parts of high yield bonds in the US and in Europe and in Asia, they still play a role in your overall income strategy, but I think you need to be cautious that the total returns, because yields are so low and probably going to rise, your total returns there are not going to be nearly as strong as maybe they've been in the last 5 or 10 years. But we think that areas in the US, we like preferred stock, for example. We think that that's an attractive segment of the market. We think that there are certain markets like non-agency mortgages, so mortgages we think still play a role, but overall we think that there's more attractive opportunities in many cases in equity markets where there are ways to get very high levels of income from equity markets and a lot more price appreciation potential than in the bond market. But that's a big theme that's within our portfolio over the last year or so.
What are the benefits and risks behind a multi-asset strategy?
I think the benefits are clearly that you have a very diversified approach. I think a tactical approach, so an active approach to asset allocation is really important because as we talked about on the fixed income side, a lot has changed in the world of bonds over the last few years. If you just bought and hold those strategies and you didn't change your allocations, I just think that's a mistake. So I think diversification is a clear benefit of a multi-asset approach. And a tactical approach is really important, and because you can get out of the way of certain segments of markets. I think there are segments of fixed income markets where you're just not paid enough yield to justify taking the risk. And I'll point to areas of the US high yield bond market. There's a segment known as triple Cs that are the lowest grade high yield bonds that once yielded 14 or 15%. And as everyone has been looking for income, those yields today are down into around 8% or maybe in the high 7% range. I don't think that's nearly enough yield to justify taking the risk. You're not getting paid enough. So I think that this more tactical approach that's looking around the world for income opportunities, getting out of the way of things that have already had a nice run, taking profits and looking to redeploy those assets in other income markets is the best approach.
What advice can you offer to investors who are investing for income?
The advice I would give to investors is to really be very cautious about not buying a fund just because it has a high yield. To get a really high yield, you have to take a lot of risk, maybe more so than you might think, to get that high level of yield. And so that highest yield approach is not always the best one, because eventually, and we've seen this plenty of times before, when markets eventually sell off, and they always do, when eventually they do sell off, these higher yielding strategies can end up being a lot riskier than you might have thought. So I think you really want to try to find an approach that doesn't necessarily have the highest yield in the market, but where the managers are actively thinking about the yield that they deliver for the client compared to the risk that they're taking. And that's certainly the cornerstone of our approach.
Thank you.
Thank you.